This is the Aussie Kiwi monthly chart, and for the better half of 10 years it's been sideways. However, you can play sideways markets. You just have to play the extremes, and only the extremes. And if you are a swing or position trader, you could have had 1,000+ pip moves over the course of the last decade. Let's scroll down to the weekly chart, and for the better half of the last 9 months, price has been sideways. And again, you could have played the extremes if you were a day trader or a swing trader. You could have had moves of 500+ pips. Let's go to the daily chart. And if you are a day trader, you could have played the extremes for moves of a couple of 100 pips. Here was one that was good for 300 pips. This would have been another one that was good for about 400 pips. If you would have short it there, potentially he has a move that's being set up. Potentially that's a move that's potentially a setup. But can you play the middle of the extremes? It's very possible. For that, you need fundamentals on your side. So this article is coming from the Reuters, New Zealand Central Bank to hold rates in July, rest of the year. So their rate announcement is coming up, I think on Tuesday or Wednesday of this week, and that's surely to move this pair. So New Zealand Central Bank will likely keep interest rates unchanged at 5.5% on Wednesday for the rest of the year, making an end to its 20-month-long hiking cycle, which has already pushed the economy into a recession. All right, so that's key. They're in a recession due to the interest rates hikes, and you can see that New Zealand leads the G7 nations in terms of central banks interest rates. Right, Kiwi's down here at 4.1, so that's 4.1 against 5.5, and this is the US at 5.25. One of the first movers in the current global tightening cycle against surging inflation, the Reserve Bank of New Zealand is probably now in a wait-and-see mode. The official cash rate is at a 14-year high, and is the highest among its developed market peers. The economy is forecast to weaken further as the impact of 525 basis points of rates have become more visible, but at 6.7%, inflation is still running at more than double the central bank's 1 to 3% target range. All right, so that should put a ceiling on the price of the Kiwi. This article is coming from Yahoo Finance, again by Reuters. RBA to raise cash rates to 4.35% in August. Economists split on peak. So economists don't know when the terminal rate is going to be and when. Terminal rate is the peak at which the RBA raises interest rates. Australia's central bank will likely deliver a 25 basis point increase rate on August 1st, following a pause on Tuesday, I guess this past Tuesday, according to economists. The Reserve Bank of Australia decided to pause again this week after two 25 basis point hikes at its May and June meeting. leaving analysts and market traders guessing on what to expect next. Inflation slowed to 5.6% on a monthly basis in May from 6.8%, well above the 2% target. So it looks like all G7 nations have a 2 to 3% target. But the new norm may be 3%. We'll see. Along with a still strong job market and a rebound in house prices, expectations have strengthened for a rate increase at the August meeting. Alright, so let's go back to the charts. This is the daily chart. So if New Zealand is no longer going to increase their rates because they're in a recession, and Aussie is going to increase their rates because they still have a very strong market, you should see money flowing into the New Zealand dollar and money flowing out of money should be flowing into the Aussie dollar, money should be flowing out of the New Zealand dollar. So if that's the case, price should go higher. However, don't trade yet. Don't take a trade yet. Let's see when the Bank of New Zealand is going to announce their rates. Tuesday night, Eastern Time, 10 p.m. That's sure to move markets. However, the expectation is that they're going to maintain their rates at 5.5. It should be a dud. Now, what I see on the daily chart is potentially a short-term bottom. I like to use the weekly chart for trend, and again, we are in a sideways market. So based on that, you have to go down to the daily chart to see what the trend is right now, and the trend right now is down, right? Price is making low lows, lower highs, and so potentially might get one of these moves here. Right, to take it to the downside extreme. Alright, I'm going to zoom in, see if there's any levels worth trading. Alright, so you see how price broke this pivot low. You have another pivot low, a major pivot low. Let's go to the 8-hour chart. Let's go to the 2-hour chart. That's only about 40 pips to get to this area here. Potentially price turns at the 1.082, but again, it's only 40 pips. Again, you're in the middle, so it's kind of got to expect choppiness. Let's go to the hourly chart. Because this is a cross pair, volume liquidity is a lot less than the major pairs. Major pairs, anything trading against the USD, which is why I see all these wicks on both sides of each candle. Here was a nice trade setup. Got a drop in price, 2 basing candles and a drop, breaking the pivot low. So that was an opportunity to go short. However, the trend appears to be reversing on the 30-minute chart, which is nothing. 2-hour chart, that's just a pullback potentially. So I can't see any setups that's worth taking. And because of that, this pair is a no trade zone. Have to wait for price to get to the extremes, either at the 1.10 or near the 1.05. Now if you do have a breakdown in price to the downside, this extended range green candle, well, that would be opportunity to potentially take it from the 1.07 down for 150 pips. But there's other opportunities out there. Don't risk our hard-earned capital on pairs that, you know, are range bound, unless that is your bread and butter. Thanks for watching. Subscribe, please like the video.